What up, guys? It's November 1st, and I'm going to go over this market alert and let you guys what's going on in the market this week, all right? Because it's very important, very busy week. But, of course, what's going on is earnings season. We're still in full swing in earnings season. We're finding that companies, 80% plus of companies are beating earnings expectations, which was not expected, of course. So this is what's keeping the market and driving us to new all-time highs today to start November. So it's been really good out there in the last 2 weeks of October, and then this November is looking very bullish pattern in the markets and the indices. So we're going to take advantage of that. We're going to talk about the charts, the Russell 2K, talk about a little bit about inflation, oil, and of course the earnings week right here coming up. And if you guys have any questions, as usual, let me know. But before we get started, please hit that like button, hit subscribe. Please, I really appreciate it. If you find any value in what I'm doing, please let me know. Leave a comment there. Any questions about what I'm doing, anything wrong, let me know. I'd love to hear from you guys, all right? So let's start with the charts. What's going on? So these are new all-time high numbers for these indices. We've never been this high. Actually, today, the Dow Jones touched the $36,000 mark. Unbelievable. That's just insane. But what I want you guys to take away from these charts, these are one-year charts, of course, for all these indices. Remember here we were panicking, right? September, October, panicking in these indices, but we use this as an opportunity to buy small cap value names, which if you remember, if you go to Instagram with my it was like one of the first videos in October, I think it was October 4th, we talked about Yardini research and the valuation of small cap value names against these large cap corporations like Google, Apple, Amazon, against the FANG names, and how these small cap value names were so undervalued against the overall market. And that's what we're taking advantage here. And lo and behold, today I'll show you guys a chart that I don't really like to refer to a lot, but this is a chart here of the Russell 2000 index. The Russell 2000 is the index for small cap value names. These are companies that have around maybe a 5 billion, maybe 8 billion or less market cap. And we see here that it's been doing a lot of nothing in a 1 year chart. A lot of kind of north and south, but very sideways movement north and south, not a straight mountain like you see the other indices. But here in a 3-month chart, we see that it's been doing a lot of nothing, but now we have a little bit of a breakout, which is a good sign, and it shows leadership from this group, which is something we hadn't had this whole year. Maybe that's going to change at the end of this season, or at the end of the year, actually, and give us some good gains in companies like The Honest Company, Voyager, what other small value names do we have? Corsair, Callaway Golf, all those guys should be the beneficiaries of the Russell 2K moving north. But of course, not everything is good, not everything is gravy. We still have to watch out for indicators that can mess up and derail this market rally. And what are those? It's the same thing that we've been talking about for a couple months now. And that's interest rates and the price of oil. And of course, interest rates we're going to measure with the 10-year bond yield. And you can see here, of course, that for October, it kept rising and rising, actually since September. So the sell-off in September, we've seen the Dow, NASDAQ, S&P right here with the increase of interest rates in the 10-year bond yield. Now these are going down, so we're getting a little bit of relief from these numbers, so they look good. Now, not good is the price of oil. We're still in rally mode since about mid-August to all the way till now. So the price of oil is something that can derail this. But again, the higher that oil gets, the more incentive that these oil producers in the Permian Basin in Texas and the Gulf have to increase production, because right now their incentive is to not increase production because OPEC and the Russians and every other oil producing country that's not us is not really ramping up. They're taking advantage of these higher oil prices because it allows them to make more money, higher profit margins, more return of equity to stockholders, which is what they're focused on at the moment. So we're going to be watching these just to make sure that they don't derail us. Just keep an eye on them. But other than that, things are looking good. And then the other thing that's going on, of course, is the Federal Reserve meeting on Wednesday. The Federal Reserve meeting is the meeting of the heads of the Federal Reserves from all the major states. I think that's like 12 of them, if I'm not mistaken. But they meet. They're going to talk about bond tapering, and which will reduce inflation, and they're going to talk about interest rate increases. And these interest rate increases are not expected to come somewhere around mid-2022. Bond tapering is supposed to come right away, but the market already expects it. So that's why we shouldn't see a surprise if what's expected happens, which is a decrease or an actual increase in tapering, meaning that the Federal Reserve is not going to buy as many bonds as they did before. Totally normal, but the interest rate increase and the talk about interest rates is what's going to be important later on. Now, moving on to the good stuff. Okay, this is the earnings calendar. I usually like to do this on Sundays, but I didn't have time this Sunday because it was Halloween, the kids, family, etc. So let's go over this here. So I kind of put a red square or rectangle around all the ones that are important, just to make it easy to show you guys kind of what I'm looking at and kind of what I follow, just to get a good idea of what the economy is doing, and specifically the semiconductor shortage. And it starts with Monday. We're going to see on semiconductor report, or actually we already saw that report, and they produced a great number, an earnings beat. On semiconductor is important for automotive. This is where Ford, where Chevy, where all these car manufacturers are trying to get lower-end semiconductors for their infotainment system, for windows, for the seats, for everything that they need in their vehicles. So on semiconductor, very, very good stock. Move up today after reported an earnings beat, and very good stock. I think it's something that I'm going to be watching to see if maybe some weakness happens. It may be worth the buy. Another stock that if you're not exposed to the semiconductor space, worth watching. Then we have NXP Semiconductor. This is one that's ran over, I think, close to 100% in the last maybe 6 to 8 months. This is another automotive semiconductor name, worth watching as well. I think it went down after reported because its guidance was not as good as expected. I still have to listen to these two here, and the conference calls, I haven't had time to do that, but I'll get to that. The other one on Monday, Simon Property Group. That's a monster owner of these malls, right? That's the landlord of big malls, big retail, and it should be doing very well nowadays, specifically for this holiday shopping season coming up. We're expecting good things there. Now, for Tuesday, we got Pfizer. Pfizer is a big, of course, I think everybody should know Pfizer. It's a big pharmaceutical giant with the Rona vaccines and, their franchises for cancer and all these kinds of things. Very, very much worth watching, I think, especially if you are invested in pharmaceutical sector. I like to look at the pharmaceutical sector because I think it presents good valuations and dividends. So for those that like dividend investing, the pharmaceutical sector is for you. Now, of course, Corsair, we own that for the account. We have a lot of bad expectations already cooked into Corsair, a lot of bad news. So I think that for the stock to go down after reports, it needs another set of bad news in this earnings report. But a lot of the information is already out there because they produced an 8K form or an 8K filing that kind of gave us an ahead of time or the kind of expectation on the stock. If you want to know what I'm talking about, go back to my Instagram and look at my take on the Corsair 8K release filing that happened maybe a couple weeks ago, in which they were telling us, hey, these logistic issues are really, really hurting our business, so we're not going to report that strong a number, greater even than 10% impact on our revenues. So a lot of bad news priced into Corsair, but I'm still going to listen to the call tomorrow morning at 5 in the morning. I'll be there if anybody wants to join me. Now, Under Armour is one that I'm always interested in because it's a competitor to Nike. I think it's a cheap stock, but it's had a lot of issues in the past, even accounting issues in the past. So it's a little bit of weird stock because I think Nike gets a lot of its power from China and Chinese sales. I'm not sure how strong Under Armour is in China. So I think it needs that component to be strong, but I think it's worth a watch. Generac is one that I've liked to watch a lot, specifically during the lockdowns. But since those lockdowns aren't happening anymore, I wonder how strong a number Generac will provide. Not only lockdowns, but weather issues in the Midwest and power outages in California are very beneficial to Generac because they sell these big power walls that can power your house for days, kind of like an F-150 Lightning could. Maybe that's going to be a competitor to Generac. We'll see. Now, after the close Tuesday, we got Activision Blizzard. Of course, these guys are muddled in a battle between them and their employees, between management and the employees. And the employees are saying, hey, the culture is bad. There's a culture of harassment. There's a culture of belittling women and treating employees bad. That's a big old mess right there. I think it's something that's going to be temporary. So I think it's worth watching because it's a strong business. I mean, Call of Duty, World of Warcraft, all those things are very enticing to somebody like me, to a lot of gamers out there, and there's a lot of growth in that sector. The problem is the Chinese mandate of 3 hours a week of playing video games. I think that hurts Activision Blizzard very, very much. So keep an eye on that one. I think this one may be hurt quite a bit when they report tomorrow in the afternoon. Now, Devon Energy is one that we talked about. If we remember, we talked about these oil prices. Devon Energy is one worth listening to. This is one of the better oil stocks, the better performing oil stocks. I think it's worth listening to see what they're thinking about the price of oil and how that's going to develop and how supply and demand is working out here in the United States and abroad, okay? Then we have Zillow. Zillow, of course, they're controversial. We're stopping our department that buys houses. So we're no longer purchasing homes because we were doing it at the height of the market, and that probably wasn't the smartest thing to do for Zillow. So they've been taking a hit, but at the same time, there's some analyst upgrades there that are saying, hey, this stock can go to $350 over the next 5 years. Maybe worth a look on Zillow. Not interested yet. My home exposure or my home sector exposure or housing sector is through Rocket Mortgage. Now, of course, this one right here, XBO Logistics, that is a logistics play. This is trucking. This is everything shipping. I think these are the guys to listen to when it comes to our shipping crisis and supply line issue. So if you want to know what's going on, you listen to XBO Logistics. Don't listen to the news, nothing else. These are the guys that are going to tell you the truth. We got Wednesday, we got CVS. CVS is interesting because they own kind of like their own healthcare. I think they own Aetna, and their business is kind of transforming into these health clinics along with Walgreens. I think it's worth a watch. It's always a cheap stock, but every time of that I've had CVS in the past and I've owned it long ago, it's done nothing but horrors for me. So I have really bad experience with CVS Health. Dividend payer, same as Walgreens. So I think if you're maybe somewhere between 50 to 75, Walgreens and CVS are good stocks for you. Okay, now nothing else here that interests me. Qualcomm is one that is a semiconductor maker, is one of the biggest ones. The Oculus Quest have the Snapdragon in them from Facebook. This is one that is a cheap stock. If you're interested in kind of like a big semiconductor maker like Skyward Solution, Qualcomm is bigger. And I think it's very reasonably priced. So it's something worth looking into, same as On Semiconductor like we talked about. Now, Skills is a competitor to DraftKings. Okay, this is a very small competitor. Of course, I prefer DraftKings any day of the week to Skills. So definitely not interested in buying Skills, but listening to the conference call just to see what the competitors are saying. Nice to know. Now, Fastly is one that interests me because this is one that was one of the best performers back in 2020 when the lockdowns were in effect because of its cloud capacity and cloud infrastructure. Very interested in this if it gets to a good valuation. I always like a good cloud name to own, to have. Fastly is definitely a candidate of a couple that I'm looking into. Now, of course, moving to Thursday. Thursday, we got Regeneron. Regeneron is one that is always a very well-priced pharmaceutical stock that pays a dividend. I think that is one of these pharmaceutical stocks that you cannot go wrong with. They're so big, so huge, that I think that just for the dividend aspect, it's very, very attractive. Now, moving to Square. Square is one of these B stocks that if you're going to chase, you're probably going to win something. You're going to make money. But I don't like these stocks that have already ran so many hundreds of percentages because now you're kind of looking for scraps, looking for 5, 10, maybe 15% gain, and then mob out because they've already priced in so much growth. But it's still excellent company. Now, Uber is one that I've owned in the past, and I let go of this back when the lockdown started because they changed their whole business concept. The concept of flying taxis, the Uber Air Taxi concept, Uber Freight, which they reduced in size. I didn't like that. That changed the business fundamentally for me, but I think I'd be interested to know if they're back on that track. The Uber Air Taxi that I saw at CES, not last year, but in early 2020, was an amazing concept, partnered with Hyundai to do these air taxis and airports to shuttle people from A to B in these big cities. I thought was genius. So Uber, definitely worth watching, definitely worth seeing if it falls into a good buyable range, maybe under 35 would be pretty nice. And now, of course, Skyward Solution, this is an Apple provider. This is my Apple exposure. So people who tell me, oh, why don't you own Apple? I kind of do. Skyward Solutions is an Apple producer. So if you look at the iPhone 12, iPhone 13, you have a ton of Skyward Solution chips in there. I think like the 13 has like 10 chips at least from Skyward Solutions. So really good business there. 5G exposure as well. I like my 5G exposure very much. And then to close it out, Friday, DraftKings. We're looking for really good numbers from DraftKings because of the NFL season and because of the ownership now of the NFL season. This is a best-in-class name. So when we're talking about Penn National Gaming, we're talking about Skills, what else? BetMGM, WinBet. This is the daddy stock of those. This is the best in class, in my opinion. Their bid for Entain didn't go as planned. That's fine. Entain wanted way too much money to be acquired, but I would have liked the acquisition. I think that the acquisition would have been good, but those talks fell through. It means we're not spending the money and we're not spending the amount of stock, or the ownership is not spending that to acquire Entain. And of course, Coinbase following up. Coinbase, I follow that one because I own Voyager Digital. I think this is the best in class for crypto trading, but of course, Voyager Digital has a much better market cap. I think this is like an 80 billion plus market cap. Voyager, when I bought it, was about a $1.7 billion market cap, now trading at about a 2.53, I believe, after it ran like 70% in one day. So that's it for the earnings. So I've gone on for 50 minutes. I don't like doing that. I know you guys get bored and you guys get out of it, but if you follow through, really appreciate it. Again, let me know if you guys need anything. The Stark Gladiators Discord is always available for you guys to join and to kind of look at, talk to us, talk to all our people in there. All these guys are experts. I'm talking experts with six-figure plus $1 million portfolios. A couple guys in there with $1 million portfolios. Very knowledgeable, okay? And if you guys need anything, hit me up on Instagram, Twitter. I'm out there talking to you guys. I love your input, love your questions. Peace out.